Hey, how are you, Aaron? Good to see you.
Good to see you too. And hello, everyone. This is Mind, Money, and Muscle, a series of discussions about being mentally, financially, and physically resilient. My name is Aaron Filipi. I'm a good friend of Cody, founder of Fowler Financial, with whom I have the great pleasure of talking with. The weather's good there today.
Good as it can be for August. 110, but we're making do and looking forward to a cooler October, November, December.
Cooler as in like 70, 80 or something like that.
Yeah, actually, yeah. I mean, that's when the snowbirds come to Arizona, and this becomes one of the most desirable places on the planet. That's why we live here.
Yeah, for sure. I mean, it is a wonderful place to live. Okay, so now today, but we got to cut right to this because I'm excited about this. Okay, so we're going to talk about something a little more money related, specifically value and banking. I've heard you talk a lot about the value of the relationships that a firm like Fowler Financial has with banks. I'm wondering, and I'm going to put you on the stand here, I'm going to push you a little bit, but what value a firm like Fowler Financial has to banks? If I'm a banker, why do I pick up the phone and I talk to someone like Cody Fowler?
Yeah, great question. And I think we're going to have more of those calls in this environment that we're in and continuing to be in over the next however many quarters. But if I'm a banker, I'm thinking about reputation of the bank, having to foreclose, looking at all the deferments for borrowers that aren't able to pay on their loans right now. I'm looking at the cost of loan loss reserves. You see this in the headlines with Wells Fargo and banks. How many dollars do you need to set aside for every bad loan? So there's some real implications for what are called non-accrual or classified assets for a banker. And when you think about the stock price and how meaningful that is when you've got such scale as a large institution, if you're a publicly traded bank, you want to make sure that your ratios are intact and that you don't have a lot of what we call bad paper on the books. So if you have an outlet for that, Fowler Financial being one of those outlets, there are others, then I think you want to build those relationships as a banker and know kind of how to massage, the books in a good way in terms of making sure that what you've got on the books is maximizing the ROI for the bank.
Okay. And we're talking in general terms right now. We're using the phrase banker. I mean, there are a lot of different roles within a bank. Is there a specific position, a specific person that someone like you would work with?
Yeah, I think probably the most common title would be your special assets manager. That's kind of code for I deal with bad paper. I deal with the defaulted loans, the problem loans. But that's usually who it is. You've got a special assets manager, and depending on the size of the bank and the type of investment committee, there may be committee decisions, group decisions as to what should we do with this group of assets that aren't paying or maybe downgraded because of maybe the credit scores have dropped, and so there's different ratings, and it's all unique to different types of banks. They have their own sort of nomenclature, but that's the common title for the individual that's handling this is the special assets manager.
Got it. Okay. And so when you're able to connect with someone like that, then what kind of conversation do you have? I mean, what are this maybe one or two questions that you might ask of that special assets manager?
Yeah, I think we're trying to get a sense for how can we be of service to the bank, because what I have repeatedly said over the course of years is you never want to just say, what do you want to go into a bank? You want to say, how can we serve you? What would make us relevant to the bank? What sort of solutions would be most meaningful for you? And sometimes kind of painting the picture. So you might say, do you have any loans that you're looking to sell? And they may say no, because nothing really comes to mind, right? They've got a lot of responsibilities. But if you said, look, in your commercial book or in your residential book, do you have some troubled assets that, that you've got a lot of bandwidth being taken up servicing those loans? They're servicing intensive, and because time is money, right? And the more bandwidth that a bank has to allocate to managing difficult borrowers, the less time they have to do their core business. And collections is just not the core business of a bank, right? They're making loans, they're not necessarily servicing them, foreclosing on them, and doing loan workouts. That's the last thing a bank wants to do. So if there's an efficient way for them to not take a major hit, and some of this has to do with also the timing, right? Timing of the quarter, timing of the year, is it year end? There's a lot of decisions that a bank will make that are driven by where you're at in the course of the fiscal year. So it may be more relevant a conversation with us at the end of the quarter or at the end of the year, as opposed to the first week of a quarter. So that's the other thing to think about, is just putting yourself in the shoes of the bank, not what's in it for me, but what people do things for their reasons, not yours. And so thinking about that helps you be a good partner to the banks.
Gotcha. Okay. And you found in the past that working as because Faller Financial is this smaller team, but that hasn't set you back as far as your ability to add value?
Yeah, I think one thing that we've done very well is say, this is sort of the wheelhouse for us. If you're looking to do a $500 million transaction, that's not something that we're going to do on our own balance sheet. Certainly, we consult for other groups that are of that sort of bandwidth and capacity. So it's not that there's really too many size transactions that are outside of our capability, but there are two different categories. There are transactions that we're going to do in-house on our own balance sheet. And then there are all of the resources that we've built over the last 10 years, 12 years, to where we might be able to help an institution if they have a much more sizable need than just selling off a small pool of loans. But more often than not, that's the type of transaction that you see, or at least that we see. And that may just be the circle that the pool that we're swimming in is those types of transactions. But our size, we're very transparent about what we can and cannot do. And we learn early on how we can help an institution. And being transparent about that, I think has led to us in terms of a reputation being well regarded in the space.
Got it. And here's where I'm going to kind of press to you. So there have to have been opportunities in the past where you had to defer those opportunities because of what you just said. You're just a team that just is not a good fit. Is that fair to say?
Absolutely. And that's the thing is, I've always stressed that you need to kind of stick to your buy box. So if there's something that we don't have complete expertise in, and we're well versed across a broad spectrum of loans, whether it be your first lien, your second lien, your performing paper, non-performing paper. A lot of people are in one category, but not multiple. So they just buy senior liens, not juniors. They just buy performing or reperforming, but not non-performing. And we're very well versed across the board nationwide. So that's one thing that's lent itself nicely to us being very relevant, is the whole spectrum of loans. We've got a lot to say and a lot of expertise to be able to add value. But if it's not for us, we don't want to come across as though we're something that we're not in the transaction. That's where it gets, that's where you get the done type of transactions. You don't build a relationship with somebody by saying, oh, we came out the gates suggesting we were in this position in the transaction, like the principal buyer. Okay, if we're going to broker something because we just realize like, hey, this is not for us, but we know a client that would be a perfect fit for this, then we're going to have to say, hey, listen, we can still help you. we won't be the ones stroking the check. We won't be the ones signing the mortgage loan sale agreement, but we're going to take it to the finish line. And it's going to look as though we are the buyer. It's not our balance sheet at the end. And who can't appreciate that honesty and that transparency? It's the part where you're trying to figure out, like, okay, well, what's your role in all of this? And all the shenanigans that goes on. That's how somebody might get a deal done, but they're not going to get another deal done because people just realize, like, look, I can't really trust you. You weren't honest. You weren't forthright. And for us, we've just found that it's our personal philosophy to act a certain way, but two, the economic benefit of that is tremendous. A relationship that can be repeatable over time is huge. And I think a lot of people overlook that, and they just think, how do I get through this transaction and maximize my profits for this deal? And that's just not what we do.
Okay, got it. Okay, so then now I'm going back to the original question of value proposition and what you offer me as a banker. What I understand you to be saying is you're keeping my priorities paramount versus your priorities paramount, and you're going to be totally transparent about whether or not, you know, it's a good fit. So I get it. That's good. Is there anything more you want to add as far as Faller Financial specifically? Because I've invited you to talk a little more about real estate investment firms like Faller Financial. Anything, you know, any shameless plugs you'd like to put in for Faller Financial just to close?
Well, you know, I would just say for, you know, any asset manager that may be kind of looking for relationships, looking to build a relationship. They don't have a Rolodex per se of, I'm going to call these 5 people because I've got loans to sell. You know, it's a small space, right? It's a small industry. There are folks that are learning. There are folks that are dabbling. There are folks that heard it's profitable. And then there's the folks that have been around for a long time, right? And they've stood the test of time through good times and bad times. And I don't think that there are that many folks. And so I would say do your homework as to who you're dealing with. And in this online world, it's just not hard to figure that out, right? Whether it's reviews or, reviews is really a great way. And I'm proud to say that here's the shameless plug, is that we're generally a 5-star review firm because just the way that we treat people. And if you can't help somebody, but you've been honest about it, I don't think you can really blame somebody. I mean, you can just say, like, we didn't get this done with them, but they were honest about it. They didn't waste our time. And that's one thing that I hold in very high regard is our time and our clients' time is very valuable. There's massive opportunity cost. As an entrepreneur, I really appreciate that. And so we're very quick to get to either a no or a yes, and here's our needs list, and here's how we're going to move through the transaction. And so that's just kind of our personal philosophy.
Well, good. Well, I appreciate that. I set you up, but that's good. That was a good plug. And it's a good transition to time. We're going to respect everyone's time here, and I'm going to close. So I appreciate your time, Cody.
Absolutely.
And to everyone out there, thanks for checking this out. And if you want any more insights, be sure to check out fallerfinancial.com. And by all means, if you have any notes to sell, real estate notes to sell, get a hold of Faller Financial at fallerfinancial.com/contact. Or if you're a banker, if you work for a bank and you want to learn more about a banking relationship with Faller Financial, just email you directly. I think, Cody, is that fair to say?
That's right. CF@fallerfinancial.com.
CF@fallerfinancial.com, like Charlie, and then Foxtrot at financial.fallerfinancial.com. And until then, be good to your mind, your money, and your muscles.